Good morning, everyone. Let's quickly start with whatever is going on in the markets. So obviously we had the great NFP payrolls data on Friday, which came in actually better than expected, and this really improved market sentiment. So we have the NFP come in at 531,000 versus the 455,000 expected. So the overall NFP employment change just shows us that as the U.S. economy, it's actually growing in terms of unemployment rate kind of decreasing. So that means that we do have more people getting employed and less people filing in for unemployment claims. So for the NFP means the non-farm employment change, and that's the only jobs for the non-farm industry in the US. And as a result, we did see a little bit of movements here and there in the markets. So this was Friday. We've seen the dollar kind of fall, and then we had, but as well we were pricing in the Federal Reserve tapering. So all in all, there was a sharp volatility in the markets, but the gold as well, it really benefited from the better than expected NFP, and as well as we did have the Diwali festival from India, so that actually did improve sentiment on the gold as well, and in terms of physical gold as well. So we have the gold climbing higher. We've actually surpassed levels of 1800s, and right now we are at levels of 1817. I will add some new support and resistance levels for you guys, but so far we did improve the sentiment on gold as a yellow metal commodity in general. We're back to levels of 1817 with potential of going even higher to 1820 and then 1830. So let's quickly take a look on gold prices. We'll add a new resistance. So I will put it over here. This is our next stop resistance at 1827, and obviously there's another resistance we can put even lower than that, perhaps. Okay. Yeah, I think we can even maybe nudge it down a little bit in case you guys just really want an accurate. So at 1824 is also another resistance that we can add if you want a closer one to where we're heading right now. So overall in Asia today, markets were a little mixed. Yes, we did have really good NFP economic figures, but there's also inflation fears. We are waiting for the US inflation, US CPI to come out on Wednesday. That will really take us to explore kind of whether inflation is still, whether it was transitionary or it's still climbing further despite growth slowing down in most companies, as well as earnings. So we're still in earnings seasons as well. That is also supporting market sentiment. And so we have our support for gold at 1809, and then we have our resistance at 1824. We're probably going to trade in this range unless there's like extremely something like an extreme event in the markets. But today one of the most important events is the Powell speech. Fed Chair Powell will be speaking. There are several Fed members that will be speaking today, but of course the most important one would be Fed Chair Powell. Now let's speak a little bit about the sterling, because we did see a major dip on Thursday. So basically what happened is that since all central bankers were expected to increase their interest rates, Bank of England actually kept their interest rates at 0.10%, and this was a surprise to markets because there was a lot of expectations heading towards the fact that we will see a change in interest rates, especially the Bank of England meeting came after the US Federal Reserve meeting, which they did not change the interest rates, but they did say that it will happen soon, and they started with the tapering of 15 billion monthly. So there's expectations that the interest rates will hike in the next year, in Q1 or by the end of Q1 or Q2. So we did see the sterling did have a sharp drop because obviously different than expectations. We did see hit a low of 1.34700, and then we've seen another low at 134,235. So all in all, we did see the GBP really falling short, especially based on the fact that the Bank of England did not change their interest rates. So right now we are actually at levels of 134.84, and if the dollar does continue to fall short, then we might see a little bit of improvement in the GBP. However, the outlook doesn't seem so positive. It seems a little bit dull just because Bank of England did not go according to expectations. So right now our support level is at 134.62, while we can put a new resistance, which would be over here, and that would be lower at 135 exactly. So again, we're trading in this little bit of a narrow range. We did see this historical pattern before at the end of September, so it's not really a major change. However, just the significant drop was obviously because of the Bank of England, and again, we're still going to see they even mentioned that because they basically warned investors not to start assuming that they're going to also hike or change the interest rate policy in the next meeting in December. So that also really weighed on the GBP, and that's why we've seen a sharp fall. Anyway, moving to the USD JPY, still trading in a very sideways narrow range at 113. Obviously, the USD JPY is heavily affected by the USD strength, and we did see a little bit of mixed performance for the USD in general. This is the USD. Right now, we are trading at levels of 94.22. But as you can see here, this was Friday's candle. We did close lower. We did hit a low of 94.16. And one more thing that I do want to mention is that the Pfizer, they are working on a pill that would reduce the number of people getting coronavirus being hospitalized, and that means that in general market sentiments really improved off that Pfizer share. Pfizer share actually jumped 11%, and that took the S&P to new highs. Now let's talk a little bit about indices. So we can see here that on Friday we did another record close at the S&P for the 7th session, and for the Nasdaq its 10th session. So we are seeing the rally continue despite the Fed tapering, and obviously indices are getting really supportive from the stimulus injections that the Fed has been doing. However, that did not stop the rally, and this news was completely shrugged off by major indices, and that is because it was already priced in the markets. So we're still seeing the rally continue, and everyone is questioning till when is this going to continue. When is this going to end, the rally? When is it going to end? Obviously, we're going to see a correction soon. Today, futures don't seem so well, so we might see a little bit of slight indifference or mixed performance from major indices, especially that the futures don't look so positive today. However, it's only fair because obviously on Friday there was an extreme hike, an extreme basically surge, and that's why we're seeing a little bit of come down. So for the S&P, this is the S&P daily chart. We are at levels of 4,689, but we did see a high of 4,719. So again, we're still closing at record highs, and we're still seeing obviously multiple shares score a really large percentage jumps, and even the Pfizer did affect the travel sector, and the S&P 1,500 airlines index also climbed 7%, and obviously with less coronavirus fears, we do have more travel and we have less restrictions in the world, and that's why we can see major indices really climb off travel and airfare kind of stocks that would see new highs. Okay, let's then move on to oil. This is the WTI daily. Obviously, you guys know about the whole Aramco increasing prices for supply. We do have greater demand right now all over globally, and we've seen that Aramco recently has decided to increase their price for oil. So we did see a $1 jump of both WTI and Brent. Right now, WTI is at $81. So all in all, we did see a little bit of correction last week, but that was because we did see major crude stockpiles. We did not see any draw. We've seen actually an increase in stockpiles, and that's why we've seen this little bit of a correction here and there. But then we started climbing off today and from Friday after Aramco announced the news that it will increase its oil production price. So I think that's it for today. Let's take a look just a little bit about the euro. Again, the euro is still at its narrow range of 115. However, the outlook seems well enough if the dollar does continue to slow its pace, because the dollar did hit a significant high on Thursday, actually, after the Federal Reserve announcement for tapering. However, if the dollar does continue to withdraw a little bit or take a little bit of a breather, we will see the euro consolidate more highs. Anyway, guys, that was it for today. I hope I've provided you with all the information that you need for today to go on and start your day. Thank you for watching, and I'll see you guys tomorrow.